In today's video, we're breaking down a powerful scalping strategy that's based on simple price action, using nothing but support and resistance. Now, just to be clear, this is not the 714 method, and we're no longer calling it a variation of that. This approach is completely different. It's something I've been testing and refining on its own, and while it's still entry-level and technical, it stands apart with its own structure and logic. We're going to walk through the entire week's price action from Monday to Friday, using the exact same rules every single day, entering at 1 p.m., looking for clean levels and trading what we see. But here's the thing, I'm not just going to show you the wins. You're going to see everything, the setups that worked, the ones that failed, and the lessons in between. Because that's how real trading looks. So if you're ready to see how this strategy performs in real-time market conditions, with honest backtesting and no filters, let's get straight into it. Alright, traders, let's get started. Now just a quick note before we dive in. We're no longer calling this a variation of the 714 method, because this strategy is completely different from the original. 100%. Unfortunately, I don't have a fancy name for it yet, but for now, let's just call it entry-level technical trading, because that's what it is. We're using basic price action tools, mainly support and resistance, to find our entries. So let's get into it. Since this is a scalping strategy, the first thing you need to do is scale down to the 5-minute time frame. The goal here is simple: get in and get out of the market as quickly as possible. We'll stick with UTC +2 since it lines up closely with the New York session open, which is when we're most active. Now, I want to be clear about this. With this strategy, I only trade the 1 p.m. session. That's it. So please keep that in mind. If you're here looking for the proper 714 method, you can check out my older video, or better yet, reach out to the man himself, Messiah. You'll find him on TikTok and YouTube. Alright, back to this strategy. When it's time for the 1 p.m. session, the first thing you want to do is draw a vertical line right at 1 p.m. Just like that. Now here's the logic. If price moves up from that 1 p.m. candle, we're looking for sell opportunities. That means we wait for price to reach a resistance level, ideally a level that has been tested before. And once we see some kind of rejection, that's our cue to enter a sell. On the flip side, if price moves down from 1 p.m., then we're looking for buy opportunities. In that case, we identify a solid support zone and wait for a reaction. If buyers step in and we get signs of a bounce, maybe a wick, a pin bar, or even a bullish engulfing candle, that's our signal to buy. But listen, we're not guessing here, and we're definitely not chasing price. We wait. We let price move into the zone, we watch how it behaves, and then we make our move. The confirmation is everything. Whether it's a strong rejection candle, a quick reversal pattern, or just clear hesitation at a level, that's what gives us confidence to enter. If there's no clean level or no proper rejection, just skip it. One solid setup is better than 5 forced ones that go nowhere. Before 1 p.m. even hits, you should already have your nearby support and resistance levels drawn. Now let's be real for a second. Every strategy has its strengths, but it also has flaws. That's just the truth. So in this video, we're not only going to show the good trades, we're also going to show the tough ones, the ones that don't work out. Because that's where real learning happens. So let's go ahead and start backtesting, beginning with the Monday chart. The first thing that stands out right away is this: price dropped from the 1 p.m. candle. And as we know by now, when price drops from 1 p.m., we're looking for buying opportunities. Now take a look at this level right here. It might tempt you to buy, simply because it's the closest zone. But when we look just a little lower, we can clearly see a much more significant support zone. A level where price failed to break below multiple times in the past. That's the level we should be focusing on. That's the ideal support, not because it's convenient, but because it's proven. So we go ahead and place a buy position at that support. At first, things don't look too bad. There's a slight drop, then price starts to bounce back up. And that gives us a bit of false hope. It looks like the buy might actually play out. But then boom, price reverses aggressively and crashes back down, completely taking us out of the trade. No mercy. Just like that, we're starting the week with a loss. And let's be honest, starting the week on a red trade can feel discouraging. It's frustrating. It messes with your psychology if you're not prepared for it. But this is also part of trading. Not every setup plays out cleanly, even if you followed the rules. All right, let's move on and take a closer look at Tuesday to see exactly what happened next. So once again, our focus point is the 1 p.m. candle. That's always our starting reference. Looking at Tuesday's chart, we can see that price dropped right after 1 p.m., which, as per our rules, means we're looking for buying opportunities. Now when we zoom out a bit, it becomes clear. There's an obvious support zone sitting just below. So we go ahead and mark that level. We can see that price has rejected from this area before, giving us enough reason to treat it as a solid support. So what do? We place a buy position off that support zone, and maybe we're targeting the previous high, a logical and clean target. But then it happens again. Price gives us a little push upward, just enough to get us hopeful. And then it turns around and crashes straight through our entry, taking us out for another loss. That's 2 days in a row, 2 trades, 2 losses. And yeah, that's rough. But this is what most people don't show you about trading. This is the part that gets edited out of highlight reels. Maybe this was just a bad week for the strategy. It happens. No strategy wins all the time. And sometimes, even when you follow the rules exactly, the market just doesn't cooperate. It's frustrating, sure, but it's also reality. And if you're not prepared to face that part of trading, you'll never last long term. All right, now moving on to Wednesday, we stick to the same routine. No changes, just disciplined repetition. We start at 1 p.m., as always, and again we notice a clear drop right after the session opens. That signals it's time to look for a buying opportunity. So what do? We zoom out, just like before, and start scanning for a solid support level. And here it is, a clean, well-respected zone that price has reacted to previously. We go ahead and mark it, and as soon as price reaches that level, we place a buy position. And finally, we catch a break. This time, price respects the zone beautifully. It bounces cleanly from support and starts pushing up in our direction. No fakeouts, no whipsaws, just a smooth move straight into take profit. This is what we've been waiting for. After 2 tough losses earlier in the week, this is the kind of setup that reminds us why we stick to the plan. The strategy played out perfectly, and we walked away with a clean win. It's not about winning every day. It's about staying consistent until the market gives you that one high probability setup. All right, now let's take a look at Thursday, and as always, we keep it consistent. We start by observing the chart right from 1 p.m. Once again, we notice that price drops after the session opens, which tells us, just like every other day this week, we're on the lookout for buying opportunities. So what's the next step? We zoom out to get a broader view of the market and start searching for a strong support level. Once we identify it, a zone that looks clean and has held in the past, we mark it clearly on the chart. Then, just like we've done before, we go ahead and place a buy position as price approaches that level. And this time, boom, another win. Price reacts beautifully off that support zone and pushes straight into profit. No drama, no hesitation, just a clean bounce and a textbook setup. After a rough start to the week, this is where the tide starts to turn. We took 2 losses earlier, and yeah, they were frustrating, but by staying disciplined and sticking to the process, we're now seeing the strategy deliver. This is the part of trading where consistency pays off. Not every setup is going to work out, but the edge shows up over time, not in a single day. All right, so now we're on Friday. Let's see how things played out. At 1 p.m., we observed that price pushed upward, which means we're flipping the script today. Instead of looking for buys, we're now focused on sell opportunities. So what's the next step? We zoom out and start scanning for a resistance level. Because when price pushes up, we want to sell from areas where the market has previously struggled to go higher. And sure enough, we spot a previous high, a clear, well-defined level that price reacted to before. This zone becomes our resistance. Once we mark that zone, we go back to current price action and prepare to enter a sell position as price reaches that level. Now here's an important reminder. When trading against momentum, or even near highs like this, it's crucial to use a proper stop loss. The market can easily spike beyond the zone before reversing, and without proper risk management, you can get taken out too early. But in this case, it played out beautifully. Price touched our resistance zone, reacted, and then dropped cleanly to the downside, hitting our take profit. So from Wednesday to Friday, we had 3 solid setups back to back. After a rough start earlier in the week, this just goes to show, sticking to the plan, trusting the process, and maintaining consistency is what makes a strategy work over time. And that's a wrap, traders. As you saw, the week started off rough, 2 back-to-back losses on Monday and Tuesday. But from Wednesday to Friday, the strategy delivered 3 clean wins, giving us a strong finish. This just goes to show, no strategy is perfect and losses are part of the game. What matters is having a consistent approach, trusting your process, and managing risk properly, especially when the market doesn't move in your favor. If this strategy makes sense to you, take some time to backtest it on your own. Don't just copy trades. Understand the logic, study the patterns, and see how it performs over time. And remember, if you're still interested in the original 714 method, check out my older videos or reach out to Mashaya directly on TikTok or YouTube. If you found value in this breakdown, don't forget to like, comment, and subscribe for more real, no-fluff trading content. Thanks for watching, and I'll catch you in the next one.